that, let's also invite the guest for our show today, who is Girish Sodhani, co-founder of Ensure Capital. Girish, you heard the management of Dhanuka Agritech. What's your view on the same?
So, yes, the overall fundamentals was very strong in the term lanes. The valuations, the PE ratios are a little bit more cheaper in the term lanes of sector overall valuations. But in the shorter period of times, obviously, the companies come into the pressures because of the margin reductions, because of the geopolitical situations currently going on. But we don't forget about that the overall scenario is very bullish in the longer period of time. For the next 2 to 3 years time frame, I think the companies are strong into the bullishness of EBITDA margins, approximately 17 to 20%. That would be very attractive in the longer period. And come into the revenue targets of the 2300 in the financial year 27 and just go beyond that approximately a growth size of around 19 to 20% on a year-on-year basis. And the Bayer integrations, the companies contributed 60 to 70% on the Bayer product lines. So this is also gives a strong book size. And the stocks currently what the company already holds in the cheaper rate and going to be expanded in the next 2 to 3 months down the line once the ceasefire is going to be expandable. So I think the whole scenario is very positive for the Dhanuka Agritech. But for the completely a longer period, at least go beyond for the next 2 to 3 quarters itself.
Okay. Right, let's go across to Varsha to understand what's been buzzing when it comes to AGI Infra.
Well, considering the AGI Infra, the stock is up almost 3% in trade, though it has come off a little bit. But if you see, the stock is up for 7 consecutive sessions, up 33% in the last 7 sessions. And on the recent news, they recently got approval for development of group housing colony, and the project land parcel measures 10.26 acres, and which marks company's maiden project in New Chandigarh. But talking about their ongoing projects, they have total units under development of around 5,854. Even mature projects are nearing completion. Onto the upcoming projects, they're expecting major launches, which include the Utopia, that the new Chandigarh project. Also, all upcoming projects are 100% owned, and the completion horizon extends to FY31 to 32. Onto the project mix, premium and luxury housing, dominates across completed and upcoming. Even affordable housing is meaningful when it comes to their legacy pipeline. Onto the sales visibility, the ongoing projects already has 52% sold by area, and the significant unsold inventory provides medium-term revenue runway for the company. And lastly, on the long-term vision for this company, they are expecting PAT margins to be around 20%, and they are also focusing on execution-led growth over land aggregation. Girish, what's your view on the AGI Infra? And considering the upcoming projects that the company has, and also what's your view considering on the overall sector when it comes to the infrastructure?
So currently the infrastructure is now into the focus because major of the projects are going to be completed. Come to the AGI now. They have recently released a Mohali agricultural housing project. Acquisitions are currently working on the reality projects of the 30 crores acquisitions. Successfully completed, there are almost 3 to 4 projects lines down the line in the next 2 quarters itself. So overall, the infrastructure companies are strongly believed of in the next at least 1.5 year time frame. Come to the AGIs right now. The AGIs looks very attractive, not in the technical propositions because the stocks are already running from the last 3 to 4 sessions very strongly, but completely based on the fundamental terms, the growth numbers are very attractive. Exceptional margins are coming out, so almost 43% above the margins in the year-on-year basis. Reportedly, profitability was a net profit approximately 30% plus. So the overall infrastructure was very attractive, but the AGI is looking more attractive because recently there's so many users for the new infrastructure products.
Girish, have you looked at this counter Hind rectifiers at the current valuations? Would you recommend this counter to your clients?
Exactly, the management commentary was very excellent. If we talk about the holistic growth in the next 2 to 3 quarters, looks very attractive. But again, there's a very strong concern about the debt and the leverage. Currently, the interest cost is much higher. In VK says that almost Q3 financial year 26 was 4.71 crores. So again, the debt equity is also going to be increased into it. So working capital required and due to the inventories as well as the receivables from the Indian Railway project lines. So many concerns about that. So I'm not looking out very favorables as of now. But my suggestion is to just wait and watch for at least next 2 to 3 quarters how the management is going to be revised as well as the restructure on the debt propositions. Then I can share any particular point of view.
Right. Well, Girish, 55% of gain in last 7 days. What would you advise to investors? Should they sell the stock, or the fundamentals are strong enough to be in the stock?
The fundamentals was very strong as of now. The tourism sectors is basically into the revelings because of the government positive initiatives by the Swadesh Darshan 2.0. I think this gives a strong build-ups to all the tourism sectors, especially the government one. So the ITDC is basically belongs to the government, but fresh allocation is not advisable. If you hold this particular stock, just wait and watch for the next good upside. But fresh allocation is not advisable.
Yet another interesting counter in trade today. Vish, any view on this counter? Despite the weakness that we are seeing in IT stocks, this stock has been on an uptrend.
So there's so many reasons behind this. The companies are almost at zero debt basically. So I think that this is a very strong push for these type of IT companies, mid-sized IT companies, we can say that. And again, the strong sentiments from the AI-driven product launch. They are recently launched at the Insanse SDD accelerator programs. Basically, it's a completely AI-based program. So again, there's so many strong builders for the overall geographical locations. Currently, they are working into the US and the Europe of approximately 85% plus of the market share. But in the last 2 quarters itself, they are diversified their portfolios from the West Asia's countries of approximately 7 to 8%. And the retention of their clientele are very much high. So overall, the strong fundamentals looks very strongly. But currently, the stocks are already performs heavily from last few sessions. So I think this is not a fresh entry propositions currently at this levels. But if you get the chance of around 150 or 155, that would be very attractive levels for the next 1.5 year time frame.
Well, thank you so much, Girish, for all the details and having a conversation with us. It was a pleasure to have you. Well, viewers, this is